This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. This is Robert Kiyosaki, the Rich Dad Radio Show. The good news and bad news about money. And once again, we're broadcasting from beautiful Scottsdale, downtown, Old Town Scottsdale, Arizona. It's either heaven or hell. Right now, it's heaven. My sweetheart Kim is in Peru on her way to Mexico. We have a very special guest today, and so the headline is this right now. You know, if you could see the future, would you do anything about it? And, you know, I meet so many people who are in, I consider it la-la land. I was just in Hollywood a few days ago, and it's definitely Hollywood la-la land. I mean, people are oblivious to what's going on in the economy. And just before that, I was in Zimbabwe, and before that, I was in Argentina. And I tell you, the world from those parts of the world, you know, looking back from Argentina or Zimbabwe, it's a different world. So to go to Hollywood, Holly La La Land, and walk around the streets of Hollywood, I'm going, wow. You know, there's so many different worlds going. So we have a very special guest. His name is Dennis Gartman. And when Dennis speaks, I listen because he is painfully accurate. I remember one time he was doing a call on gold. I didn't like his call, but he was right. You know, and so I listen to what this guy says. So if you're going to be rich, wealthy, and happy and all that, you've really got to choose who you listen to carefully. So this is a very, very special, you know, program. So don't listen to that idiot brother-in-law of yours who doesn't know anything, talking about the Kardashians or whatever it is. So our guest today is Dennis Gartman. He's been publishing his commentary, the Gartman Letter, since 1987. His website is thegartmanletter.com. Please subscribe to it. So, Dennis, I'm just going to let you take the lead because there's so much going on. I'm not going to get in your way. So what's going on, Dennis?
Well, the first thing we have to talk about is the trade circumstance here in the United States. And let me begin by saying that I am somewhat to the right of Genghis Khan politically. I am a free market libertarian for all intents and purposes. And I believe that free markets have, as my good friend Larry Kudlow says, capitalism is the mother's milk of economic strength. But what we have now is a president who believes in trade protection, who believes in trade tariffs, who believes in stultifying trade, not expanding trade. And this I find discouraging, given the fact that he supposedly is a Republican, and he is a Republican in name only. I'm going to make a lot of people angry with this, and I understand that, but so be it. The president has put into effect threats of and actual impositions of tariffs upon trade, especially with the Chinese. And let's not kid ourselves. The Chinese cheat. They always have. They always shall be. They steal our intellectual property rights. Not a question about it. But the fact that the president boldly stands in front of the American people and says he will have the Chinese pay for the tariffs is contrary to anything that has ever happened when you have trade protectionist policies put into effect anywhere around the world through history. The exporter of a traded good that has a tariff put on it does not pay the tariff. The importer of that good pays the tariff. And in the end, the American consumer pays the tariff. It is a sum zero minus game when you put into effect trade tariffs, which increase the cost of refrigerators, televisions, iPhones, shoes, clothes, golf clubs, light fixtures, you name it. Most of it, or a goodly portion of it, is made in China. Those prices are going up. And when you do that, you have taken money out of the pockets of consumers that could be spent on other goods and services elsewhere. It's just an illogical, unsupported, uneconomic policy that we are now, as Republicans, intended to follow. And I'm sorry, it is absolutely bald-facedly wrong. And the stock market, here we are on Wednesday, October the 2nd, as I like to say, the tooth of October. Here we have the stock market down 350 points yesterday, and as we talk, it's down 580 points this morning. They're going to try to blame some of that weakness upon the fact that Bernie Sanders may be having some health problems and probably will have to withdraw from the Democratic nomination, and they're going to blame it on the fact that Elizabeth Warren will probably be the recipient of his support in the future, and that's almost a certain fact. That's what's going to happen. But really, I think what's happening is that the market is beginning to understand that trade tariffs, trade protection, trade inhibition of trade is detrimental to the economy.
So, Dennis,
yesterday...
Matt, quick question, because the Rich Dad Radio Show is an international, global program.
Yeah.
So when the U.S. does this, what happens to the rest of the world?
Their propensity to put other trade protectionist policies into effect is increased. Trade around the world decreases. Economic activity will be like a balloon losing air, will be deflated. It's just as one circumstance follows another. So this is when we send the signals that the great bastion of free markets, the United States, is no longer the bastion of free markets. It sends a signal to other people to become trade protectionist in and of themselves. It is not a healthy signal to send. There are other things that can be done. I wish I was wise enough to understand or to put forth programs that we could incur. But trying to inhibit trade is detrimental to global trading activity. It's detrimental to global stock markets. It's detrimental to global economic action. So, I don't like to be a harbinger. I don't like to be a carrier of ill news. But this is news that I've talked about for months, and I think now it's finally coming to fruition.
Okay.
The decline yesterday in the ISM, as we used to call it, the NAPAM report, the Purchasing Managers Index, which fell below 50 for the first time in 10 years, is certainly not an indicator of economic strength. It is indeed an indicator of economic weakness, and we have to pay attention to that fact.
So let me ask this question. Okay, so let's say that you're, like most of our listeners are like me, kind of, we're not in the main, we don't have any influence inside the halls of Congress or in big corporations and all this. So how does a little person prepare for what you see coming? Because as I said, everything you say, Dennis, comes true. And so if you can tell us what you think is going to come true, that's why we play that song, I Can See Clearly Now. Maybe we can take some action before this stuff happens.
Well, I think given the fact that I think stock prices have gotten to be precariously high and now are starting to show signs of internal inherent weakness, probably taking some of your money off the table if you're long of equities across the board, using any periods of strength that might evolve after this 800-point decline in 2 days, and you'll get a bounce, no question about it, but it won't be much of one, I'm afraid. Probably should reduce the size of your position. You should probably be less long than you were, and your propensity to be a buyer should be somewhat inhibited. You probably want to increase your exposure to the bond market a bit. Even though I know that interest rates at the long end of the yield curve, and I don't want to get too esoteric, seem inordinately low by historical standards, it's the safest place to be. And the United States is still the only place in the world, in the industrialized world, where you can get positive returns on your on 5 and 10 year capital, 5 and 10 year Treasury securities. Whereas in Germany, you're paying to give the German government money. Whereas in France, you're paying the French government to give them money. Whereas in Luxembourg and Belgium and almost in Italy, you're paying the government to get to take your money. At least here in the United States, you're making 1.5%, 2% for 5 or 10 years. And if things do what I think they are doing now and will continue to do as I fear they shall, that's probably going to be the best trade. So you want to be less involved in the stock market. You want to be involved in the bond market. And finally, you still want to be involved in the gold market. I'm not a gold bug. I don't think the world's coming to an end. But in periods of displeasure, in periods of not only economic weakness but political chaotic circumstances, and impeachment is upon us, gold will probably do fine. Thank you very much.
So let me ask this question, because we were laughing about how you and I both knew who Alfred E. Newman is. We're so old.
Yeah, we are, as they say, of a certain age.
Yeah. How in the world can there be negative interest rates? I mean, in all your wildest dreams, when we were young guys coming up, was that even a possibility? And then what do you think the long-term effects? This is what I look to you to tell me. What do you think the long-term effect will be when you have to pay a bank to keep your money?
It cannot be good, can it? Never in my wildest dreams did I ever imagine that we'd see the sovereign nations of Europe or Japan have negative interest rates. It is absolutely astounding. It is stunning. It is, by historical standards, utterly impossible, and yet here we are. Now, there are legal reasons why that they have the negative interest rates in Germany and across Europe, because the ECB mandates that nation's banks hold a certain amount of European sovereign debt, and they're racing each other to get hold of some of it because the ECB is requiring it. But 10 years from now, we will look back and say, just what in God's name were we thinking that we allowed interest rates to go to negative levels? I mean, that makes absolutely no sense.
So let me ask you this.
How we've gotten here is beyond me.
Right. Now, I was talking to this guy whose grandparents were part of the Weimar Republic in the 1920s.
Yeah.
And he said it was so terrifying that their money was just dropping in value so fast. What do you say to mom and pop right now who all their lives have been saving money, saving for that rainy day, and suddenly that nest egg sitting in their either their bank account or their 401k is being decimated? You see, we can talk about the ECB and all these guys in the Bank of Japan, but mom and pop are being taken out right now.
Well, I don't think that we have to fear here in the United States that we will have a replay of what happened in the Weimar when what was then the Bundesbank went on a binge, such as the Reserve Bank of Zimbabwe went on, and the Reserve Bank of Argentina has gone on in the past, where they monetized debt at an astronomical pace, and were printing money at an egregious astronomical rate. I doubt seriously. In fact, I think that that's simply not going to happen here in the United States. We are the world's reserve currency. The press, the media, the public is so aware of what the Fed does on balance compared to any time in the past. That's not going to happen. I don't think you have to worry about the fact that your money is going to become worthless, but you do have to worry about the fact that you're only getting paid instead of what you and I used to be comfortable with, 5, 6, 7, 8, even 9% for Treasury securities of a 10-year duration or longer. Now it's down to 2.5%.
Yeah. So my question to you is this: we can talk about the ECB, Bank of Japan, PBO, Bank of China, but mom and pop right now sitting at home, they have quantitative easing, which they're printing money, and interest rates are dropping. What do you say to those guys?
Let me clarify that. The Fed had began or stopped the process of quantitative easing. You can absolutely look at the date. It was April 15th of 2015 when they stopped adding to the Fed's portfolio of Treasury securities and actually began the process of allowing those Treasury securities to roll off. We've actually been in a period of 4 years of quantitative tightening, which I've argued with. The Fed really the Fed stopped quantitative easing in April of 2015.
But isn't that what isn't that what Trump's upset about? That's why he's on Powell about, hey, play ball here.
Yeah, well, the president is stepping out of way past his surfboard when he mandates that the Fed begin to move into a policy of much easier interest rates and push. And the president has actually asked the United States that the Fed send the Fed funds rate, the overnight rate that banks trade with each other, toward the levels that exist in Germany, which is negative numbers. That's not going to happen, nor should that happen, and the president really shouldn't even be involved in asking that effect. But I do think that the Fed needs to begin the process again of adding reserves quietly to the system through Fed purchases of Treasury securities, because, as I said, beginning in April of 2015 until about a month and a half ago, they were allowing those Treasury securities to roll off, and they were actually imploding the supply of money, not increasing it. To keep things in a very simple perspective, you need two things to keep the economy going higher. You need population growth, which we don't have, and you need a quiet expansion of the Federal Reserve or the central bank's monetary aggregates. If you want the economy to grow by 4%, you need like 2% population growth and 2% growth in the monetary aggregates.
Okay.
What we've got now is negative population growth, or very, very modest population growth, if we have any at all. And as I said, since 2015, we've imploded the supply of reserves. So we need to increase those, but we don't need to increase them to the levels in the manner and the speed with which they did it from 2008 to 2015. That was probably a little excessive.
Right. So Dennis, once again, you're talking about the presidential level and congressional level and the bank. But what does mom and pop do? So when we come back, I'm going to ask you that question again, because I think really that's our target, that's our listener right now.
Okay.
And if you were Dennis Gartman and you didn't have your sophistication and you had, let's say, $100,000 in savings and you had a house, would you drop back and punt? What do you do? Because Dennis, I sit around asking myself that all day long. I said, I've never seen negative interest rates. I can't even fathom that.
I'm with you.
Why would you give a bank? With you, Robert. Why would you give a bank for 30 years so they can pay you back less at the same time? it's being devalued anyway. So where is this?
Unless you think that deflation is going to be raging for the next 20 years, then in fact, if you give a bank $1,000 and get back $990, but if the economy were deflating, if inflation disappeared and deflation continued to be extant, maybe that $990 is actually of greater buying power than the 1,000 was 10 years earlier.
You mean you're less of the loser, huh?
You're less of a loser.
Okay, Dennis, we'll be right back, but keep that in mind because, like, our market right now, there's guys like me and my friends and all this. We're going, no, what do we do? Trump.
Okay.
Trump's my friend, but he's not going to listen to me. So anyway, we'll be right back with Dennis Gartman, and don't forget his website is thegartmanletter.com. Please subscribe to it because Dennis is the most accurate guy I've ever heard. We'll be right back. Welcome back. Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And once again, I can see clearly now because it's a very, very important show, as all our shows are. But our guest today is Dennis Gartman, and when Dennis speaks, I listen because this guy can see. I mean, he is crystal clear on his calls, his visions, and actions. So once again, you can listen to the Rich Dad Radio Show anytime, anywhere on Android or iTunes. And all of our programs are archived at richdadradio.com. We archive it for one reason, is because repetition is how we learn. So I highly suggest you listen to this program again. You'll pick up even more. But more importantly, have it listen to it with friends, family, and business associates. Because when Dennis speaks, you have a chance to take evasive action as quickly as possible. Because he and I have never seen anything like this. And which way this economy goes, who knows? But I think Dennis has probably the clearest crystal ball of anybody. So Dennis, what would you, again, we were talking about for the little guy, of all these, these mammoths are jumping all over the place. We're talking about Italy going down. You have Argentina with a 100-year 8% bond. And what's going on? What do you think what should people do?
I think it's abundantly clear that, again, as we talked earlier, if you have a huge portfolio of stocks, if some people are actually on margin, if you have a large portfolio of stocks, I think you should reduce the size rather materially, maybe half as much as you had on.
Wow.
I think truly. I mean that. I think that we've seen the wind has shifted, and sometimes you can tell the wind has shifted in the course of 2 or 3 days. And I think in the course of the last 2 or 3 days, with the ISI, with the Purchasing Managers Index falling below 50 for the first time in 10 years, with stocks now down almost 900 points on the Dow in 24 or 48 hours. With the European stock markets, the German stock market, the French stock market, with even the Japanese stock market all falling today, I think you need to pay attention because I think the markets are beginning to understand how serious are the implications of trade protection, trade tariffs that we put into effect. So I think you want to be less involved in the stock market. I think you want to be, as you do that, I think you want to find greater exposure to the bond market, only U.S. Treasury debt, nothing else, maybe Canadian debt if you have that ability. But you don't want to own European debt. You want to own North American debt. And strangely enough, normally these two things move in contravention. Bonds and gold tend to move in contravention one to the other, bonds rising as gold falls and gold rising as bonds fall. But I think now you're going to see for the next several months and maybe for the next several years, the bond market move quietly sideways to up and gold moving up at the same time, which, as I said in the past, would be countercyclical. In the past would seem illogical, but sometimes the illogic things suddenly become logical.
So how would you
the wind has shifted.
How would you, well, one last question, okay?
Yeah.
I just heard that nobody showed up for the last bond auction in Japan. So what the heck is going on?
Well, actually, the Bank of Japan showed up and took almost everything. And they are the buyer of last resort,
right,
which is disconcerting. I mean, you have to be somewhat concerned when domestic buyers don't want to buy their own domestic security. If you're a Japanese investor, what would you do if you see that the Japanese 10-year bond is yielding negative 10% or negative 10 basis points, and U.S. Treasury securities are yielding 175 basis points? What's your propensity to buy Japanese bonds over U.S. bonds? Your propensity to buy Japanese bonds is if not reduced to zero, has been at least somewhat greatly reduced, whereas your propensity to buy U.S. Treasury securities, if not raised 100%, at least has been increased materially. So I think that's what's going on. The Japanese, Mr. and Mrs. Watanabe, as we refer to them, are quietly moving out of Japan and moving their money properly to the United States.
But then that sets up the U.S. dollar gets stronger and stronger, which exacerbates our trade deficit, right?
Well, historically, that's the argument they taught you in school, that a strong U.S. dollar tends to inhibit trade exportation. But to be honest, let's think about this for just a second. Historically, that doesn't always prove to be correct. If you are on a trend from the lower left to the upper right as far as the dollar is concerned, and it has been going that way for several years, what kind of signal does that send to potential buyers of your goods and services? It says you better buy them now because they're going to be higher in price later.
Oh, inflation.
So, yeah, well, not necessarily inflation, but certainly it sends that it tells you as a Japanese buyer of American grain, for example, you're probably better off buying it now rather than waiting. And when that happens,
right? Okay, that makes sense.
It's a better deal. So, in fact, one of the great examples of that, I use this example all the time, is in the 1980s. New Zealand, which I admire greatly, had been a basket case as far as economics had been concerned. The IMF had told the New Zealand government, well, you're running a budget deficit, you're running a trade deficit, you need to devalue the value of the New Zealand dollar, and you need to raise taxes. They did that for 15 years, and as they raised taxes, tax revenue fell, and as they devalued the New Zealand dollar, exports declined.
Wow.
So Roger Douglas, who became the treasurer, we would call him the Secretary of Treasury, said, you know what, if for 15 years we've been doing what the IMF has told us and it's done exactly the wrong thing, we're going to go 150 or 180 degrees in the other direction. We're going to cut taxes, and we're going to talk about raising the value of the New Zealand dollar. And lo and behold, after about 10 years, revenues increased as they continued to cut the marginal tax rate, and exports increased as the New Zealand dollar rose in value. It's an interesting experiment that not enough people pay attention to.
Okay, Dennis, I'm going to be in China, Japan, Singapore, and New Zealand in a few days.
Yeah.
So what do I say to New Zealand?
You tell them that you better hope that commodity prices begin to rise, because you need to be that will be beneficial to the New Zealand dollar. The Chinese, I think, you need to tell them that they need to stop stealing American secrets.
Yeah.
Period. End of discussion.
Yeah, I want to leave Japan. I want to leave China in one piece. You know.
Well, then that will be problematic, won't it?
And then in Japan, I mean, I'm Japanese.
Japan,
I don't know what
Japan
to say.
Japan has a. I'm sorry to say this. Japan is a country in ultimate decline because the population is now imploding. It's actually declining at a precarious rate. I don't hold me to the numbers, but I think there are now more people above the age of 70 than there are below the age of 15, i.e., there's no growth at all in the population. Population is declining. The birth rate is down to 1.5, I think, 1.5 births per each woman, and you need to have 2 in order to keep the population growing, and you need population increasing. So Japan, I'm afraid, is terminal in nature.
Well, its
own government has said that its population is going to fall in half in 20 years, which is extraordinary.
Did you see? I think it was 60 Minutes. Is that the young guys don't have sex anymore, and the girls aren't because
that's actually true.
Yeah, because a woman doesn't want to have sex with a guy without a job or something like that.
Oh, it's very sad, but Japan is truly imploding. The only growth industry in Japan, to be honest, is robotics, because as the Japanese population grows older, and there won't be people to take care of the McDonald's, there won't be people to take care of the people. They need to have robots to do it. So the only growth industry in Japan is robotics. It's very strange and very sad.
Well, they can have a robotic wife or husband then, I mean, jeez.
We don't want to go there.
No. But anyway, hey, Dennis, can I ask a technical question that I always wonder about is, I guess I keep hearing more when they talk about the Fed and they talk about recession. Recession.
Yes.
What does recession, to me, don't recessions come as a matter of course? They come down and goes back up again? And
recessions, the United States has gone through what? I've lived through the recession since I was born in 1950. I've lived through the recession in 58. I lived through the recession in the middle 60s. I lived through the Great Recession in 72, 74, the double recessions in 80 and 81, the massive recession in 07 to 10, and we're probably heading into another recession. Remember, recession by definition is simply 2 quarters of negative GDP growth. That doesn't mean the economy is imploding. It just simply means that GDP slowed and went negative for a short period of time.
Right,
Unemployment at 3.9% will probably be back to 5% in a year from now.
And I'm older than you,
we'll
and
go
I've
through a recession.
I'm older than you. I've gone through recessions. You know, they're kind of a good time because things kind of flush out, clean out. You get back on your feet. But for some reason, Dennis, does it seem to you this time they're more afraid of this thing called recession?
I think it's simply because there's so much more public media than there used to be. The internet gives rise to a greater amount of information and disinformation than we've had in the past. In the past, it was your evening newspaper and the Wall Street Journal. Now it's your evening newspaper, the Wall Street Journal, the South China Morning Post, the Süddeutsche Zeitung, MSNBC, CNBC, CNN. You're bombarded every day. You hear the word recession, and you suddenly become massively depressed. I think it's a matter of just an abundance and an overabundance of media participation that has caused the problem.
So two final questions I got to ask you.
Yeah.
What do you think, when those drones hit Saudi Arabia, right? And then you have Brexit. What are your 2 points of view on those two events?
If I were, regarding Brexit, if I were British, I would vote for Brexit. I would be a leaver. I would be saying I'm done with the nasty regulations that Europe has imposed upon me, and I'd rather have my own sovereignty back. So I'm a believer in Brexit. If I were British, I would be a voter for it. I'm not a great supporter of Mr. Johnson. I think he's a bit of a show-off, but I think he has a hard job, and I think he'll probably succeed in getting through with Brexit. As far as the attacks on Saudi Arabia, what bothers me, two things. One, because of fracking and because of seismic technologies and drilling productivity here in the United States, most people don't realize that the United States on any given day is the largest producer of crude oil in the world, surpassing that of Russia, surpassing that of Saudi Arabia on a rather consistent basis. Nobody would have ever dreamt that was going to happen 10 years ago. And all I can tell you is we will be farther ahead of the Saudis and farther ahead of the Russians 10 years from now than we are now. That's going to happen. And that's one of the reasons why when the attack on Abqaiq and Quraysh oil fields occurred 2.5 weeks ago, there was an aberrant price leap to the upside, but the market understood right away that, one, the Saudis were going to do all that they could to return Abqaiq to productivity because they have the Saudi Aramco IPO overhead, and they want to make sure that they get that taken care of. And two, the Permian Basin is going to continue to take up any requirements of domestic and perhaps international export trade. It will come out of the Permian and out of the Bakken oil fields in North Dakota. So the abundance of production here in the United States, if there's been one major change in the world in the last 10 years, it's that.
Okay, thank you. Final words, Dennis. Final words. What advice do you have for the average person out there right now?
Be less involved in stocks, be more involved in bonds, and own a little bit of gold.
All right. Dennis, thank you very much for always being a fantastic contributor to the Rich Dad radio program. You have very powerful or clear insights, so thank you.
Thank you, my friend. Always an honor to be asked when you scrape the bottom of the barrel.
Give me a break. Give me a break. You're not on TV enough. That's your problem. I don't get enough. Anyway, thank you.
Thank you, my friend. Okay. Cheers. Good luck and good trading.
Thank you. And we come back, go to the most popular part of our program, Ask Robert. We'll be right back. Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And once again, thank you to Dennis Gartman. His newsletter is called thegartmanletter.com. He is somebody, everybody on this comes on Rich Dad Radio has a point of view. This money thing is such a big subject. Everybody says they have all the answers. They know what they're talking about. But Dennis is one of the clearest, probably the most articulate, and every one of his calls has been right on. I mean, I have not liked some of his calls because it went against my call, but he was right. I took a bath because I didn't listen to him. But anyway, I have a tremendous respect for Dennis Gartman, and he's editor and publisher of the Gartman Letter since 1987. So once again, listen to the Rich Dad Radio program anytime, anywhere on iTunes or Android, and all of our programs are archived at richdadradio.com. We archive them so you can listen to this again because there was a lot of information today, especially. Listen to it again, you'll pick up twice as much. And more importantly, you can discuss with friends, family, and business associates. This is not an ordinary time in world history, ladies and gentlemen. To think that tomorrow will be like yesterday, you're completely dreaming. The world has never been here before. Like Dennis and I were talking about it. How in the world can there be negative interest rates? We've never had that in 5,000 years. And every time what does that mean? Most people don't know. We've never been here before. So, and this is a world event, not just a U.S. event or a China event. Before, like if one country went down, it stayed isolated to that one country. This next crash is going to be global. So please, ladies and gentlemen, listen to this radio program again, discuss with friends, family, and especially business associates, and make plans for the future. Take evasive action now. So going back to the Rich Dad, you can submit your questions to Ask Robert. You can submit your questions to richdadradio.com. So Melissa, what's the first question for Ask Robert?
Our first question today, Robert, comes from Floyd in Arkansas. Favorite book, Rich Dad, Poor Dad. He says, Robert, I just started reading Fake, and I have a couple of questions. I know you always talk about gold and silver, but are platinum and palladium good investments also?
Oh, you're hurting me, man. You're hurting me. I invest in gold and silver because I know gold and silver. Now, the mistake I made was platinum was a hot thing. Everybody was talking about it, so I ran out and bought some. The trouble is, I think it was platinum. It looked just like silver. So I was paying the same price for gold. No, I was paying the same price for platinum as I was gold, but I thought the platinum was a silver coin, and I sold platinum for the same price as silver. So I kind of stay with what I know, gold and silver. If you like palladium and platinum and all that stuff, knock yourself out. But I highly recommend you know what you're investing in and like what you're investing in. I love gold and silver. I've taken 2 companies public through IPOs, which the Chinese stole in China, and my silver mine in Argentina. I love gold and silver. I've been, I'm coming out with an article about why silver. I started investing in silver when I was 16 years old. And it was 16, I started noticing the coins, the U.S. silver coins, like the dime and the quarter, and the silver dollar had this copper tinge around it. And it's called debasing. Debasing means they put base metal, in this case copper, inside the silver. So as a young boy, I knew I was being screwed. I said, they're messing with me right now. So at 16, I started collecting gold, and I'd go to the bank, I'd get all these dimes, and I get all these quarters and half dollars, and I'd look for anything with copper in it, and I give it back to the bank, and I keep anything without copper. And that's called Gresham's Law. And Gresham's Law means when fake money enters a system, real money goes into hiding. And I was in hiding with all my silver coins, except my mother spent them. She had no idea what I was doing. Well, that's why my mom was poor. She didn't really care about money, and she didn't know she was giving away my coin collection. She also gave away my marble collection, was worth a lot of money. So anyway, we had different values. So the question about palladium and all that, if you like palladium, study it. Get to know why it's used. I understand why silver is used. I understand why gold is used. There's one more reason I like gold and silver, and palladium is just as good, is the amount of gold and silver in the world is very thin. It's like a little fog on a window. There's not much gold and silver out there. And if and when, I think sooner than later, when people catch on that money is fake, which I wrote about in Fake Money, Fake Teachers, Fake Assets, the moment they pick that up, the amount of gold and silver available for everybody is almost nil. So that's why, I could be wrong, but if there's only like 1/10 of 1 ounce for every person on earth, what you got. So I don't really care what the price is anymore. Every time it drops, I buy some more. I just buy some more. I just stockpile it, and I keep it in safe places, out of the banking system, out of my house, but in very safe places that only myself and Kim know about. So anyway, I really, thanks for reading Fake, because it's fake money, fake teachers, fake assets. And they all 3 have to work together. You can't have fake money and fake assets if you didn't have fake teachers. Our teachers know nothing about money. So they'll tell you such things as go to school, get a job, save money, and invest in the stock market. And you hear what Gartman said, get out of the stock market, start lightening up now, because the pounding is about to come. Thank you for your question. Next question, Melissa.
Our next question comes from Brian in Waterford, Michigan. Favorite book, Cashflow Quadrant. Says, Robert, I'm a big fan of gold and silver, and I enjoyed your book, Fake. My question is, why do you think the gold to silver ratio is so out of whack today? Is gold overvalued compared to silver, or is silver on sale?
It depends on, I asked that question myself. I have no idea. And a lot of people I talk to have no idea. I just think the biggest bargain on planet Earth today, and this is October 2019, is silver. you've got to back up the truck on silver now. It's less than $20. Everybody in the world can go to a coin dealer and buy a silver coin. It's the lowest it's ever been relative to other asset prices. At one time it was $50. Today it's about $20. I'm glad it's out of whack. I'd be buying as much as I could. The other thing, too, somebody was playing games with the gold and silver market, and they dumped it, and gold dropped from in U.S. dollars, because the price varies depending upon the currency or the country you live in. So let's say it was about $1,500 for gold. It dropped to $1,450. It dropped $100. And somebody was playing games with it. So I just backed up the truck on gold. The thing I noticed, though, was that silver didn't even fluctuate. Silver just stayed solid. So the predictions aren't worth anything, but silver should be worth about $100 in another 10 years. So at $20, that's a 500% gain. So right now, if you have any kinds of money, you have $20, which is what 2 Starbucks. Go buy some silver instead. You'll be farther ahead of the game. Next question.
Our next question comes from Amir in Miami, Florida. Favorite book, Rich Dad, Poor Dad. Says, what will the U.S. government have to do if they want to put the dollar back on the gold standard?
I tell you, I got asked that question a lot too. And as the Japanese say, never happen, Joe. And the reason I don't think it'll happen is because if gold went back into currencies, fake money, they couldn't play games with it. It would actually become real money then. And so they couldn't play games. So I think Bitcoin and Ethereum and all that are in reaction because everybody knows the U.S. dollar, the yen, the euro, the peso are fake. And Dennis is bullish on the U.S. dollar, but I don't trust the U.S. dollar at all. I mean, I don't trust my government. So anyway, it's a long way of saying it is that I would rather go for what I trust. And that's about it. My definition of money is an idea backed by confidence. All it is an idea with confidence, representing work truly done and is exchangeable. So the trouble with money is not holding its value. The definition of money is going to be a storehouse of value, medium of exchange, and a store of value, whatever it is. They're printing it. And even if they don't print it, is that the fractional reserve system is where you put $10 in the bank, they lend out $9. That $9 gets lent out 10 more times. The whole system was rigged against you, the saver. That's why in Rich Dad, Poor Dad, savers are losers. The rich don't work for money, and your house is not an asset. And I'm still catching hell for those sayings, 25 years after publishing Rich Dad, Poor Dad. And people are still saying to the kids, save money, go to school, get a job, buy a house because it's an asset. And we're in a bubble right now, ladies and gentlemen. We're in this massive, massive bubble, and people are trying to buy more houses. The time to buy a house is when it crashes. The time you buy silver is when it crashes. The time you buy stocks is when it crashes. It's that simple. It's that simple. So anyway, those are the lessons. And I thank you all for listening to the Rich Dad Radio Show. I want to thank Dennis Gartman, and you can submit your questions to Ask Robert at Rich Dad Radio. Thank you very much.
giông thu êm đềm hà diều đã bóng đắm cháy giữa đồng kỷ niệm yêu thương trong mỗi ngày tiếng cu gọi hãy nhớ biết bao tôi xa quê bao năm tháng qua nhưng trong trái tim không bao giờ xa lời mẹ ru con hiu hiu chưa hè mùa lụt nước lũ bắt cá giữ